Okay, so I think we're going to disagree on a whole lot of things today. But I think the one thing that we're all going to agree on today is that the worst place to be right now is the US dollar. Am I right about that, Mooch?
The worst place? No. And listen, I don't think it's the worst place because it's the tallest of the relative fiat currencies, but it is a bad place because of what they're doing to the dollar. Ultimately, they're corrupting the dollar. You know, Peter wrote best-selling books about this. The way we're monetizing our debt and the way we're printing money, 469 billion US dollars printed this year in the first 5 months. It erodes the ability for the middle and lower middle income people to catch up with the wealthy, and it's creating all of this political angst, but not the worst place. There are a few worse places.
Yeah, like Bitcoin.
You know, like as an example, well, you see, here's the thing. I am convinced after now studying Peter, and Peter, you know, he was very forceful and very persuasive yesterday on his gold pitch on the Intelligence Squared debate, but I'm convinced that Peter owns Bitcoin. I'm absolutely convinced of it because
I wish I owned it. I don't.
The way he talks about it, I think he's accumulating it and he's trying to push the price down because I think Peter sees what Kevin sees. And I admire Kevin's flexibility because he was a Bitcoin skeptic and now he got invested. And ultimately, it's what Andreessen said. This is a software that has transformed the world and is going to allow us to do things with each other that we could never do before without an intermediary. And when you stop and you think about that shorter distance, there's no longer a triangle, Rob. There's a distance just between me and the person that I want to transact with as a direct result of the blockchain, Bitcoin, and some of these other ecosystems that are developing. It's going to massively change the world.
Yeah, but that's all a bunch of hype so far. Nothing has been transformed. All you have is people collecting digital tokens and gambling with them. That's it. I mean, it hasn't changed anybody's life other than some people are richer because people bought it.
Of these wallets, you're leaving out all of the infrastructure and architecture that's being put in place to create this massive superhighway. I'm going to let Raoul talk.
All that is malinvestment, though. That's all going to.
He knows how early. Raoul knows how early it is.
Let's go back to this issue on gold versus Bitcoin, okay? What's wrong with owning both? I've got a 5% weighting in gold. I have for 20 years. I've got bullion I pay storage for. I use the GLD to balance on a quarterly basis. I buy into the gold story. I always have. But what's wrong with adding a little dabble, do ya, of Bitcoin? What's wrong with putting it in a portfolio? What's wrong with it?
To me, it's not about a question of Bitcoin versus gold, right? To me, it's like Bitcoin versus GameStop or, AMC or, any other meme stop or, to me, that's a speculative asset. Gold is where I put my safe money that I want liquid, that I don't want to lose. I just want to store value.
Peter, that's fine. That's fine, right? Nobody has an argument with that. But Bitcoin and the crypto world is the fastest adoption of any technology in all recorded human history. It's growing at 113% a year. It's 140 million people. There'll be 1 billion users by 2024. You can't say, well, this is all irrelevant. Everybody's being deluded. This is a madness. Only gold is the truth.
No. First of all, it's got nothing to do with gold. It's a speculative asset. So if you're saying, where do I want to put my chips? What speculative assets do I want to gamble on? Personally, I think there's a lot more upside potential relative to the downside risk in other speculative opportunities that I am taking advantage of. I don't believe in Bitcoin. I never have. I don't think it's going to work. And so I can't buy it and put it away because I don't have any faith in it. But there are other speculative assets that I would rather own. But as far as something that's conservative, a store value, Bitcoin doesn't even qualify as that. It's all hype.
What would you see having a similar risk reward to Bitcoin? So Bitcoin on average, you're going to see a 60% downside and a 213% upside a year, right? That's the risk.
You don't know that. Bitcoin has been around for about a dozen years, right? That is not a long enough time horizon to say that you know anything concrete. And the entire time Bitcoin's been around, we've been in a gigantic bubble.
The same, right?
Huh?
Facebook's been around the same. So's Google.
No, but Facebook is a company that has revenues and customers. It's got nothing to do with Bitcoin. Bitcoin's just a token. But my point is, Bitcoin's entire life history has been during this gigantic bubble. 0% interest rates, quantitative easing. It hasn't been in a cycle. All kinds of crazy stuff are going up. People are just buying all kinds of nonsense. It's all momentum. It's all hype. You can't draw any conclusions about what Bitcoin is going to do in the future by looking in the rearview mirror for the last dozen years. It's going to have to be around a lot longer than that. And in my opinion, it won't be around a lot longer.
Is the network of Bitcoin itself worthless?
I don't know what the network is worth, right? I don't think the coins have any value, or the Bitcoin. I don't know. I don't think Bitcoin itself is worth anywhere near what people are willing to pay for it. And I think history is going to bear me out. I don't know what that network is worth and what else it might be able to be used for, Peter, other than gambling with Bitcoin.
You invest in a company. You just made a point of a company with revenue and customers, all right? When you invest in any company, you are speculating as well that the management of that company can deliver on the perpetual earnings that you think they can do and, in fact, grow the business. There's many times, let's take Kmart, for example, where executional risk in the end made it worthless. They weren't any good at doing it. When you make a speculative investment, whether you buy a Picasso or a Warhol or whatever it is, you're speculating that others will look at that. For example, I bought a Warhol. I've got the 11th Mick Jagger. I'm speculating that will be worth more 10 years from now, because people will think that that's rare. What's the difference between my Warhol and my Bitcoin? What's the difference?
Because there is a long history, going back a long time, of wealthy people appreciating owning art and collecting art and displaying art on a wall. It gives you a lot of satisfaction to have rare pieces of art, hanging in your house that, you can admire, you can enjoy, you can impress your friends. There's a lot of value. And yes, it's not even so much that when you're buying a piece of art, it's that I think it's going to go way up. It's like, I want to preserve my wealth. I got a bunch of paper. I've already got real estate. I've got stocks. What else can I do with my money? Let me put it in some art. It's because paper can always become worthless. So you have to have real things. And a rare piece of art is actually truly scarce. I don't think there's anything really rare or scarce about any of these cryptocurrencies, including Bitcoin. Nobody's going to impress their friends with a picture of their Bitcoin wallet hanging on their wall. I mean, it's not, and when you're talking about a company, right. When you buy a business,
Raoul is totally going to impress people with his Bitcoin wallet. Okay, Raoul, put that Bitcoin wallet on your wall.
Hold on.
I'm impressed already. I just want to say one thing to my fellow guests, and something I learned actually from Mr. Wonderful is about the adaptability and about understanding that the world is moving at an exponential pace. And so what I love about Kevin is he had a point of view, and then he stepped back and he said, okay, wait a minute, let me challenge my hypothesis and let me look at the world. And so it's reminiscent of Thomas Malthus. He said that we were all going to starve. The food was not going to pace the population growth, but he missed irrigation and all those technological developments. And I just think that Peter's line of thinking, which I respect and is something I was trained to study in the 80s and 90s, I think we've had a seismic change in the world, and we're about to have an introduction of newer and newer technologies, AI, robotic technology, biotechnology, software programmable biotechnology. All of these things are going to lead to an unleashing of exponential growth that we can't understand in our primordial system. Because we're sitting here in a 100,000-year-old piece of machinery that hasn't evolved, and yet our iPhone went from iPhone 1 to 13 in 10 years.
Yeah, in other words, it's different this time. Yeah, I know. That's what they always say.
I think it's the same this time. I think it goes to the tweet that I think, Raoul, you made this tweet earlier saying, I still see people calling crypto a bubble, and thus it's unsustainable. I mean, you looked at the charts, but then you compared it with the tech stock overvaluation, and I guess it speaks the same. It speaks volumes.
Well, I agree. I think everything that's speculative is overvalued. All those tech stocks are overvalued too. I just think that Bitcoin is even more overvalued because those tech stocks have some value. I just think the prices are too high. I don't think Bitcoin has any value. So any price is too high.
Let's stay with that thought for a second, and let me propose something to you, Peter, and the rest of the group to debate, because I live this every day. I service institutions and sovereign funds, pension plans, in the indexing business that I'm a part of. And well, here's what they tell me, and you can debate this till the cows come home, but I've come to believe it, which is really what's turned me around on my crypto portfolio. I own a lot more than Bitcoin today. They want to play in crypto, and the only thing that's keeping them out, whether it be Bitcoin or stable coins or tokens or whatever it is they have no compliance infrastructure. So here's how it goes. They go to their committees and say, look, I want to put on a 3 to 5% weighting in a set of different crypto assets. Are you guys okay? Now, most of us that deal in stocks and bonds, and I certainly do, I have an infrastructure that marks to market my holdings by the second. My internal compliance sees it. They give it to the independent auditors every week. They audit every month. And we issue our compliance to the regulator as we have to in our different mandates. There is no infrastructure yet today to do that institutionally in crypto. And that's why, let's talk Bitcoin. I really believe this, that there's $1 trillion worth of buying if we could provide two things to the institutional buyer. Solve the ESG problem on the mining and award of coins. For example, that's become a big issue. Everybody knows about it. It was Bitcoin 2021. It was a huge deal. And I'll tell you something really funny about that conference that I haven't disclosed to a lot of people. In that audience, because I was, that panel, I was the chair of that panel, and we were talking about how these giant miners were going to solve the problem. I look into the audience with sunglasses on and baseball caps pulled over their faces are all the institutional clients that I service, the big guys. They were there, but they didn't want to be seen there. They didn't want to be known to be there. They're walking around with plastic bags, listening to this stuff because they want to come into that market and they can't do it yet. So we got to solve ESG and we got to solve the compliance platform. Now, there are companies like Circle and like FTX that are starting to build that infrastructure. And when they figure it out, Katie bar the doors, Peter, you're going to be left looking pretty dumb because that asset class will become an institutional asset all around the world.
So Kevin, there's another group called LUKKA. They do, one of the issues is there's no open close, there's no official pricing, all the exchanges have different prices. There's a group called Luca that's putting that all together to make like the ISM market or S&P Global for the authentic prices for all the accounting firms for audits. So they're scaling super fast right now. So it's all coming. And like you and like Mooch, I spend probably a third of my week or a quarter of my week speaking to sovereign wealth funds, family offices, and global institutions who are all trying to get up the curve on this. I mean, everybody's making the move. It's not going to happen. I mean, literally the whole lot of them are.